go through that strategy and go through how it works, and when you come, maybe you'll override that portfolio manager or not, but what's the checklist you kind of go through?
So we look for very high quality businesses, what we describe as simple, predictable, free cash flow generative, dominant businesses, a business that Warren Buffett would describe as having a moat around it, right? If you believe that the value of anything financial is the present value of the cash you can take out of it over its life, well, you need to know how much cash it's going to generate over its life. So business quality to us is the single most important criterion for determining what's interesting. Because if we can't predict the cash flows, we don't know what it's worth. If we don't know what it's worth, we can't invest. So we figure out what it's worth, figure out how good the business is, how predictable will this cash flows be from a railroad or a spirits company or a real estate company, shopping mall business. And then we say, okay, well, where's it trading? And if there's a wide gap between price and value, you can buy it for 50 cents, it's worth $1.20. Well, then we're going to take a hard look and try to understand why it trades at a deep discount. And once we understand the reasons, we decide, well, these things that we can solve. Or can we, in light of the situation, the circumstances, can we be influential in changing these levers that can cause this valuation discrepancy to narrow? And is this a business that, while we're causing the valuation discrepancy to narrow, we can also perhaps contribute to the valuation growing? And if those things are true, we found something that looks quite interesting for us.
And usually this investment philosophy, does it take a week, a month, 3 months to do the research, a year? I mean, you have 10 names. How long?
It depends. I mean, one of the best investments we ever made, it took us 4 hours to do the work. It was during the financial crisis.
Which was that?
Wachovia Corporation.
Okay.
So I was on my BlackBerry eating breakfast at the Brooklyn Diner in front of my building, and there was a story went across the, I was just, Wall Street Journal headline, Reuters headline, excuse me, went across saying, that Citigroup to acquire the Wachovia banking subsidiaries for $2 in Citigroup stock. Stock was halted. And this was kind of an interesting transaction because they were buying the subsidiaries for Citigroup stock. I figured, this is interesting. What happens to the holding company? So I went back to the, kind of went upstairs to the office and cracked open the 10K, and another member of the team, Mick McGuire, he and I worked on it. And what was interesting is the 1,000-page 10K of Wachovia Corporation, I think 900 pages were on the banking subsidiary. There was fewer than 100 pages on the holding company. And by buying the banking subsidiary, Citi was leaving a holding company which had cash, in Wachovia securities, A.G. Edwards, they had paid $6-7 billion for it 6 months before, Evergreen Asset Management, and they were taking a $27 billion loss on the sale of the subsidiary. And it also had a liability called non-cumulative perpetual preferred stock, which if you ever want to have a liability in your life, this is the single greatest liability to have. It's a form of equity where you never have to pay a dividend, and when you don't pay them, they don't accumulate. Right. And the worst case is they get a couple directors on the board, and you say hi to them each meeting, and you have this very, and I said, look, this could be our Berkshire Hathaway. And at the end of the day, we figured the asset, in 4 hours, we determined the holding company was worth at least $11 to $14 cash, a tax refund that you could carry back the $27 billion loss, recover cash taxes that have been paid. So you have this cash vehicle. You own Wachovia Securities, which is a good wealth management business. Mm-hmm. You own A.G. Edwards, another interesting asset. These are businesses you know well. And the stock opened after it was halted at $1.84. So we said, look, it's worth 11 to 14, $1.84. We bought 42% of the volume for the next 4 days. And then it was acquired by, then Wells came in and put in a topping bid of $7 in Wells Fargo stock, which wasn't actually a topping bid. But the Wells Fargo deal did not require government assistance.
Right.
So I think Sheila Bair liked.
Yep, I remember that.
Liked
I
that deal
actually
better.
Interviewed Sheila Bair.
Sure.